many point to gold's recent price dip and claim its relevance is fading. This is a fundamental misunderstanding. Short-term price swings are just noise, driven by speculative trading, not by gold's true value. Gold's role isn't shrinking. It's being redefined by central banks and global institutions. The narrative that gold has lost its luster ignores the strategic accumulation by central banks worldwide. We're not seeing a flight from gold, but a repositioning for a digital future. The price on your screen today is a distraction. The real story is in the physical market, where central banks are buying gold at record levels. This is a coordinated strategy to build a foundation for the next era of money. Physical gold is being secured in vaults, preparing for a new, non-speculative role. The era of gold as a mere commodity is ending. It's becoming a core part of monetary architecture. The recent price dip is a smokescreen, masking a much larger trend. Gold's importance is rising, moving to the center of the financial system. Those who understand this shift aren't alarmed by volatility. They see it as part of a necessary transition. Gold is set to become the bedrock of confidence for the digital currencies of tomorrow. The real story of gold is written in the vaults of central banks, not in retail trends. After decades as net sellers, central banks are now the world's biggest gold buyers, by design, not nostalgia. This is a strategic pivot. Gold is being integrated as a neutral, trust-inspiring asset for the digital age. Gold is shifting from a passive safe haven to an active stabilizer for the global monetary order. Think of it as the foundation beneath the digital financial system, trusted, finite, and universal. Central banks are methodically building reserves to backstop the new system and provide instant credibility. Soon, large international balances may be settled with tokenized gold or asset-backed digital instruments, reducing reliance on any single currency. This isn't theory. It's the new financial plumbing already under construction. When you see central banks in China, India, and Europe increasing gold reserves, it's not speculation. It's preparation for a new monetary regime. Gold is being remonetized, not for public circulation, but as the trust anchor for digital currencies. This is the great pivot the markets haven't fully grasped. The future system will settle on gold's stability, not fiat's promises. Those watching closely see gold's role evolving, not fading. Central bank digital currencies, or CBDCs, are not just digital cash. They represent a fundamental shift in monetary structure. For centuries, money creation was a two-tier system. Central banks issued base money. Commercial banks created most money through lending. This gave commercial banks power and introduced systemic risks. CBDCs change everything by making digital currency a direct liability of the central bank to the citizen. Your CBDC balance would be a direct claim on the central bank, not a commercial bank. This eliminates commercial bank credit risk and moves the system's center of gravity back to public authority. It's not just a tech upgrade, it's a re-architecture of monetary power. CBDCs allow central banks to manage money supply and policy with unprecedented precision. Financial stability becomes possible in ways the old system couldn't deliver. CBDCs aren't just competitors to cash, they're the next evolution of money. They offer safety and control the current system can't match. This is about building a resilient, centrally managed foundation for 21st century finance. The defining feature of a CBDC isn't speed, it's control. Every unit is a tokenized liability on the central bank's ledger, giving central bankers a real-time overview of the entire system. This transparency is essential for preventing crises and ensuring stability. Centralized architecture allows direct policy action. Stimulus can be delivered instantly, or interest rates adjusted on CBDC holdings. These tools are far more effective than today's blunt instruments. It's not about surveillance, it's about having the levers to steer the economy towards stability and prosperity. Illicit activities thrive in today's fragmented system. A unified CBDC ledger makes such actions far harder. Transactions can be traceable within a clear legal framework enforcing the rule of law. Some fear centralization threatens freedom, but true economic freedom requires stability and security. Unregulated financial spaces have brought volatility and crises, not freedom. CBDC's architecture of control is the price for a safe, stable system. It's the foundation for sustainable economic activity. In the future monetary system, regulation isn't a burden, it's a core feature built into CBDCs from the start. The era of financial innovation outpacing regulation is ending. With CBDCs, compliance is automated. Rules are embedded in the code, ensuring every transaction follows the law. Smart contracts shift us from reactive enforcement to proactive, automatic compliance. Know your customer and anti-money laundering checks become continuous and seamless, closing loopholes for illicit actors. This creates a secure environment where legitimate commerce thrives. Compliance costs for businesses drop dramatically, freeing resources for innovation. A regulated digital currency accelerates commerce by removing friction and uncertainty. Regulation is the software running on CBDC's hardware, making the system safe, efficient, and trustworthy. The unregulated Wild West of early crypto showed the dangers of weak oversight. Without strong regulation, digital assets become tools for speculation and fraud. The future of money is perfectly regulated by design. This is how trust and stability are built into the system. No matter how advanced, a purely digital state currency faces a challenge: public trust. After decades of fiat management, people may be wary of giving more power to central banks. This is where gold becomes crucial. To anchor CBDCs and inspire confidence, a modern digital gold standard will likely emerge. This won't be a rigid return to the past, but a flexible linkage, declaring digital currency backed by physical gold in central bank vaults. It's not about daily convertibility, but about guaranteeing a floor value and ultimate source of worth. Linking digital money to gold provides a bridge of trust to the new system. Major banks are already preparing for gold-backed digital assets, integrating them into mainstream finance. Nations seeking to de-dollarize are testing gold and digital assets for trade, real-world proof of concept. By tying digital currencies to gold, we create a system that commands deep, instinctual trust. The shift to a new monetary system is underway. Central bank gold buying, CBDC development, and tighter regulation are all part of one coordinated project. The era of unregulated financial grey zones is ending. The prudent path is to understand and align with these changes, not resist them. Unbacked crypto and decentralized finance will face mounting pressure to comply or become obsolete. Private gold holdings will be integrated through regulated custody and tokenization. The goal: a unified, transparent system with no shadows for risk. Those who see this trajectory are preparing, not fearing. True wealth preservation will be about holding quality assets within a stable, regulated system. The opportunity lies in embracing the future, not fighting it. Aligning with central banks is the logical strategy for the years ahead. Look beyond daily market noise. See the new architecture being built. The wise will adapt and position themselves for the inevitable new reality. As we look to the future, gold-backed tokens have emerged as the crucial bridge between traditional finance and the digital frontier. By anchoring these digital assets to gold, a symbol of stability and enduring value, They've gained widespread public acceptance. People trust what they know, and gold's legacy stretches back centuries. These tokens offer a sense of familiarity in a rapidly changing financial landscape, making the leap from physical gold to digital representations feel natural. This widespread comfort with gold-backed tokens has smoothed the path for the introduction of central bank digital currencies. As society becomes accustomed to holding digital assets tied to something tangible and time-tested, the conceptual leap to CBDCs is far less daunting. Gold-backed tokens have, in effect, laid the groundwork for a new era, one where digital currencies are not just innovative, but also rooted in the stability people have trusted for generations.